Good evening, ABR MarketWatch viewers. Today, we witnessed a pause in the U.S. stocks rally as investors shifted their focus towards Nvidia's earnings due on Wednesday. The S&P 500 slipped 0.3%, with the Dow Jones dropping 349 points and the Nasdaq 100 finishing 0.4% lower, primarily dragged down by sectors like consumer staples, health, and utilities. Despite this dip, the broader market mood remains buoyant, with rate cut expectations high following Powell's dovish remarks. Traders are pricing in an 86% chance of a September move, while keeping an eye on upcoming economic data, particularly Friday's PCE inflation report, which is expected to show core inflation at 2.9%. In this volatile U.S. economy grappling with inflation, job market softening, and political uncertainties, investors are advised to stick with what's working: tech, utilities, and industrial stocks. Despite economic flux, corporate profits remain robust, with S&P 500 earnings projected to grow by 9% this year. Tech giants such as Qualys, Broadcom, and Hewlett Packard Enterprises top UBS's proprietary stock screening methodology. Notably, Broadcom, trading at 31 times forward earnings, has surged 27% this year, just behind Nvidia at 29%. However, it may face a raised bar in the second half of the year due to high investor expectations. Other sectors also offer promising picks, like healthcare with Alnylam Pharmaceuticals, Medpace, Cencora, and Cardinal Health, or consumer stocks such as Kroger and Dollar Tree. The latter has thrived on gloomy consumer sentiment, with share price gains pushing its forward PE ratio to nearly 19, which doesn't appear exorbitant given the average S&P 500 stock trades at 22. Looking at today's market movement, the S&P 500 index witnessed a 0.43% decrease, marking its largest one-day point and percentage decline since August 19, 2025. Despite this, it remains up 11.35% since Election Day in November 2024 and 7.38% since Inauguration Day in January 2025. On Monday, New York's Dow Jones Index experienced a dip of 349 points or 0.77%, with significant losses from Merck, Amgen, and 3M. However, Nvidia, Nike, and Chevron saw gains. This market fluctuation seems to reflect a broader trend of volatility in the tech and pharmaceutical sectors. As always, stay tuned to ABR MarketWatch for the latest market insights and analysis. Until then, happy investing.